Hello, and welcome to my channel. We're all about wealth or finance management, new business ideas, quick tips to make your life better, or anything that can help you in your daily life. Click the bell button, as we're surely going to change the way you think about daily life or business. In today's video, we're going to talk about 5 business tips to get loans at low interest rate. A loan from the bank, whether it's a personal or business loan, can be very helpful in getting your company off the ground. It can help you start a new business and grow it into a successful one. When you take out a loan, you're not just borrowing money, you are also making an agreement with the lender to pay back the money in time with interest calculated on the amount borrowed. The terms of this agreement will typically include what happens if you default on your payments, or if something happens that makes it impossible for you to repay your debt. This type of agreement is necessary because lenders want to make sure they get their money back at some point in time. It takes time for loans to be repaid, and often more than one person has to work together to make sure that happens. Loans are commonly used by businesses as part of their financing strategy when they need capital for expenses, like marketing or equipment purchases. Loans are an essential part of any business, and they can help you grow your company in many ways. They can help you get started with a small amount of capital, which will make it easier for you to expand and grow your business. You'll also be able to take care of unexpected expenses that come up during the course of your enterprise. So if you're looking for ways to invest in yourself and your business, then taking out a loan is a great idea. But there is one enormous issue. High interest rates are a big concern for small businesses. It's often because they cannot get the loan at the right price, or they need to borrow money for a long-term project. Interest rates are usually determined by the risk of a borrower and their credit score. There are many factors that affect the interest rate of business loans, such as the type of loan, whether it's secured or unsecured, the length of time required to reimburse the credit, the amount borrowed, and so on. 1. Be honest with your lender. In a world where people are often looking for shortcuts, it can be hard to find the right path. When it comes to financing your business, there are some things that you can do to help your success and protect yourself from being taken advantage of by unscrupulous lenders. One thing that lenders look for is honesty. They want to know what you're doing with their money, and they want you to disclose all the necessary details about your business. They'll want to know what you're buying, how much it costs, and how long it will take to pay off if you were to buy that equipment or lease that property. Being honest with your lender will help them understand how serious you are about making sure this loan works out for everyone involved. You'll also get a better rate on the loan if they know that you're taking good care of yourself by keeping track of expenses, so that they don't have to worry about paying them off quickly. 2. Find a lender that specializes in your industry. If you're an entrepreneur, chances are you've already spent a lot of time researching different lenders. You want to make sure that the loan you're getting is going to be the best for your business, and that it's going to be as simple as possible for you to manage. But what if you can't find a lender that specializes in your industry? Lenders specialize in certain industries because they know how to work with those industries' unique financing needs. The best way to find a lender that specializes in your industry is by doing some research first. Here are a few tips about how you may do that. A. Research the lenders in your industry. Find out who's who and what their biggest competitors are like. B. Make sure your lender fits within their peer group. If they specialize in lending money to businesses with high revenue or profit margins, then make sure they have those same traits. C. Check out the company's website and social media profile if they have one. Look at their customer service ratings and reviews, which will give you an idea of what kind of service they provide. 3. Have a strong credit score and good repayment history. Having a strong credit score and good repayment history are important to get a loan. Having a strong credit score can help you get a loan, especially if you want to buy a house or car. It's also important to have good repayment history so that lenders don't see any red flags when they look at your application. Here are some tips on how to make sure your credit score is high and your payment history is solid. A. Make sure all of your bills are paid on time every month. If they aren't, contact them immediately.
and ask them to set up automatic payments. This will help you stay organized and prevent late fees from piling up. B. Always make your payments on time, no matter what. Late fees can really add up over time and cause serious damage to your credit score if left unchecked. Paying late just once may not seem like much, but over time it adds up. 4. Have a plan for how you will repay the loan. When it comes to paying back your loan, a good plan is essential. You don't want to be caught in the middle of your loan repayment and have no idea what's going on. That's why it's important to get a plan in place before making payments. Here are some tips for creating a plan for your loan repayment. Make sure you know how much of your loan is due each month or quarter. This will help keep you on track with your payments and stop you from getting behind on your payments. If possible, pay extra each month into an emergency fund so that if something unexpected happens, like a job loss, you won't be left scrambling with no way to pay off your debts. Keep track of any bills that aren't paid on time so that you can work towards getting them paid before other bills come due, again later this month or next quarter. If there isn't enough money left over after each payment to pay off the next month's principal balance on time and interest, make adjustments to your budget until there is enough money left over each month so that paying off principal every month is possible, even if it means going into debt. 5. Don't be afraid or even shy to ask for help. If you're looking for a loan and are worried about asking for help, don't be. It's hard to admit that we need help, but sometimes that's exactly what we need. Many people are afraid to ask because they're not sure how to approach the situation, or they might feel embarrassed about needing financial assistance. The truth is, there is no shame in asking for help when you need it. In fact, it's actually what makes us human. Here are a couple of reasons why. A. We're not perfect. We all make mistakes. And when we do, sometimes those mistakes can be pretty costly. In most cases, that cost is financial. But sometimes it can also be emotional or even physical. So when we find ourselves needing help with our finances, it's okay to ask for it. B. We so rightfully deserve to be treated as equals. One of the biggest reasons people struggle with their finances is because they feel like they're being treated unfairly, or like they don't deserve anything better than what they have right now. But this isn't true. And if you ask for help from someone who cares about you, then your self-worth will go up, and so will your confidence level. So these were our 5 business tips to get loans at low interest rate.
I hope you enjoyed this video. I'm sure you'll love our other ones too. If you liked this video, please give it a thumbs up and consider subscribing so that you don't miss any of our latest content.